Have you ever wondered how proprietary traders actually trade? In this video, you'll find out. In it, one of our highly experienced professional traders breaks down his trading bar by bar, showing you how he comes up with the exact entries and exit points, stop loss levels, profit targets, and risk reward ratios. He also discusses the market conditions that led him to take each trade, such as trend, support and resistance levels, and price action signals. You don't want to miss this video we produced for the trading community. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account.
In this bar by bar, you'll learn about a few setups and a few variables I look for to put on an opening drive scalp, a changing fundamentals short, and what I look for to put on a momentum trade into the close and into the after hours. You'll also get a look at what I like to look for to time a market short. All right, everyone, welcome back to another bar by bar. Today we're going to go over 3 or 4 trades. These trades are in UAL, United Airlines, Tesla, and Carvana, and a market trade. So the first one I want to go over is just a quick scalp in United Airlines. So yesterday, which was Thursday, July 20th, United Airlines reported earnings, and the earnings were decent. They beat EPS by $1. Full year EPS was raised by $1. For the next quarter, they see capacity up 16%, with total revenue higher by 10 to 13%. On the surface, it seems like it was a pretty good quarter for them. However, what I noticed when I took a look at the chart was that it was not able to gap above new 52-week highs. And that's odd. So anytime I see really positive earnings, I want to see that stock gap above key levels on the daily. And this wasn't doing that. In addition, American Airlines also reported earnings, and they were gapping down. And maybe more importantly was I had in mind Delta's earnings from last week. We'll take a look at what they did here. So you can see a gap to new 52-week highs, opened up above new 52-week highs, and failed right back down. And maybe that's the most important thing about this. So we're seeing these airlines that have been doing really well all year, for the most part, and they're struggling to make new highs off of earnings. So in that case, I'm looking for a sell the news short on United Airlines. So you can see when they report, can't quite touch 52-week highs, and then we have a pre-market high around 56.70. And even though it's on low volume, you can kind of see it curling lower, getting below that after-hour support area. And then off the open, we get a pop into pre-market highs, and it immediately gets slammed down, and it goes red on the day. So what I'm looking to do is I'm looking to short the first pop versus the high of this bar that broke through VWAP and went red on the day. So immediately I'm really zoned in on the level 2, and I see a pop up to 55.75. I'm hitting that really quickly, and simply what I'm looking for is I'm just looking for a gap fill this gap. And that's exactly what we get. And I cover into that for like just a quick $1, and the trade's over for me. This is an earnings gap that fills its gap, and when we see a gap fill, we could typically expect some type of bounce, and that was just a quick 2-minute scalp that I decided to take there. So opening drive to the upside, fails from pre-market highs, gets back through VWAP, goes red on the day, and I'm looking to short that first pop versus the high of this bar. Now we'll go over a changing fundamentals trade in Tesla. So Wednesday night, Tesla reported earnings. They beat on EPS and revenue, but it was gapping down because auto gross margins were soft and free cash flow fell short of expectations. And first thing I notice is this after hours low here, and it bounces from that area and then into the open. What I'm looking for is I'm looking for a break below the opening range, and I'm looking for a failure below that after hours low. So you can see off the open, the first move is down. It gets above that high. It's struggling to gain momentum over that high, and it fails back below VWAP and puts in a new low here at 276.15. 945 comes around, so the opening range is established. And now we have this low, which kind of coincides with that after hours low. So you have kind of like two key levels right near each other, which makes a break at that level should be more powerful. So you can see the stock, it's sort of a failed follow through new low. It pops into our 21 EMA, fails, and it's holding really clean below VWAP in our EMAs. Makes another slight new low and then bounces. Can't quite get above the 9 EMA now, pops into the 21 EMA, fails, and it starts curling over. But before that, I just want to mention this candle that I have highlighted here. There were some pretty decent sized bids down at 276, and as those bids dropped, I took this opening range break. However, as soon as the bids dropped below 276, I hit the bids, and immediately it traded right back above that. That is not what I want to see for an opening range break trade and a trade that breaks below its key after hours level after it reported earnings. So immediately, I'm not being stubborn with that. As soon as it rebids 276, I'm getting right out. I could still tell that it's weak because it's consolidating here near the lows, and it's struggling to get above the 9 EMA. It fails back down to new lows. Now, along with this, you have the market rolling over, and that makes for a really good trade. So I'm going to try it again down here. I take the short when it gets back below 276 and breaks that after hours low. And I'm riding that momentum. And as it starts getting a little extended from that 9 EMA, you can see it's been hugging it, and now it's getting a little extended from it. I'm taking covers on each leg down, just taking off about 10% of my position and locking in those gains. And then as it breaks the trend here and starts to bounce, I'm just covering the rest of the position. So really nice opening range break. And if you don't get it the first time, you just take your loss as soon as it rebids. Good opening range breaks, they just work like you see here. So when that doesn't happen, it's okay to take a quick just scratch on that trade and then look for another opportunity, especially if it proves that it's holding lower, can't get above those EMAs. Next trade we're going to talk about is Carvana. Let's just take a look at the daily chart. It's been squeezing. You can see 28 acts as resistance, gets above it, and then you have a consolidation higher, and it's holding these gains here. And Carvana does something really interesting, and they decide to release earnings a day early. They reported strong earnings for the second quarter. The company's revenue grew 134% year over year. Net income was $220 million. They announced some debt restructuring, so they reached an agreement with its lenders to restructure their debt. And this is going to reduce the company's debt by $1.2 billion, which gives them more financial flexibility. And there's a negative here. They announced an at-the-money offering where the company could sell up to $1 billion worth of common stock or 35 million shares from time to time through an at-the-money offering. So you kind of have two positives and one negative. Just looking at it at the surface level, not digging too deep into those. And what does the stock decide to do? It decides to squeeze really hard on that. And we know that Carvana is the most heavily shorted stock in the US market. Coming into the day, I know there's going to be some really big range on this, and I'm really, it could do anything. So I'm more just, rather than game planning, I just want to keep an open mind with it and see what type of patterns develop. Pre-market gets back towards that high, fails, comes into like this pre-market support area, more of like an inflection point, right? Because it's not a clean area. It's more of just a general area where the stock's done a lot of volume. So off the open, fails, puts in a low. Now we have an opening range low. Pops up into the opening price and tries to go green on the day, reclaims VWAP here, and then fails. And then we get high volume through that opening range low, through that low of day, and it quickly reclaims. And you see the volume here. So that tells me we had shorts hitting in, we had long stopping out, and someone just absorbed all of that. And again, that's what we like to call a failed follow through new low. Opening range break, and that should just work. It should just drop. And it doesn't. Reclaims. Gets back above VWAP. And now we have high volume through that prior lower high. So I take a long in there, but now I'm noticing, okay, can't get above 55, gets above 55 and fails, tries to get above 55 again and fails. So I took a small scratch on that trade. Now we're getting into the slower hours of the day. I'm just keeping an eye on it. Around 145, the stock starts to reclaim VWAP, and I'm just watching it very closely. And what I like to look for is, for a trade, a momentum trade into the close, I like to see a heavily shorted stock that's gapped up a lot, and it's holding its gap, right? It's holding its gap. And there's a lot of short patterns in here that look like good shorts, but the stock just can't go lower, and it's holding a gap really well. I can't stress that enough. So towards the end of the day, once 3 o'clock rolls around, if the stock is still holding above VWAP and holding its gap, and I know it's heavily shorted, I'm stalking this for a momentum long into the close. Volume comes in over this little consolidation here, and I start getting long. Now it's holding that opening price, so now it's holding green on the day. Gets above 55, I'm adding a little bit. Moves higher, I'm adding a little bit more. And at this time, I decide to also add some $59 calls to my position for this week that expired today, Friday, the 21st. So now I have an equity position and I have a call position. Just because the range is so wide on this that it could easily gap above 59, and we know it's heavily shorted, so it could do something crazy. And if we look at the daily here, we have 52-week highs right around $58. So if it gets above there, it could really squeeze. Now the stock closes above this 55 resistance, closing at the top of its range, top 20% of its daily range, which is key for me to swing a long position. And I'm just watching it after hours, and it's just low volume, holding around that $55 resistance level, and then some volume comes in, and you get this really nice move from about 56 all the way up to 62. And as it's getting around $60, I start taking profits on my equity position, just because I think a squeeze over the intraday high and that pre-market high, that should result in a few point move. And I think that is a high probability trade. And as it gets into the 60s, like I said, I'm selling my stock. And the best way I can explain why I do that is because, sure, this could go to 70, 80, but the likelihood of it going to 60 is much higher than looking for that big squeeze to 70, 80. If you're always playing for like a massive squeeze like that, you're going to lose like 95% of the time. So I'm taking the profits on the equity here, and with the calls, now I have a nice free trade on these lotto calls that I bought in case it wants to gap up and do something crazy like go to $70, $80. And it very well could happen given the short interest on this stock. So now I have a nice big cushion from that equity position. And on these calls in the morning, I'm looking at the stock. Okay, it's not gapping up. It's trickling lower into the open. And that's not what I'm looking for. So as soon as the market opens, the stock gets a nice pop, and I'm getting out of those calls for pretty much break even. And that's because I'm not going to be stubborn with that call position. The trade was this could potentially gap up and continue squeezing. We didn't get that. I'm getting out of the call position. Next, I'm going to do something a little different and talk about an options trade that I put on in the Qs. So you can see the market's getting a little extended here. We have the 9 and 21 EMA, and we'll just throw on the rest of the moving averages for the sake of it. You can see it's done a really good job holding the 20 moving average, holding the 10 simple moving average during this recent uptrend. And now we're starting to get extended from those short-term moving average. We're up about 6 days in a row here. I just noticed on Wednesday that things started slowing down a bit. So I put on a put position here after we got this failure below VWAP, and I did that for a few reasons. So again, the stock's been up multiple days in a row. It's had an amazing move and it's getting extended from short-term moving averages. I also knew that the NASDAQ 100 is undergoing a special rebalance today, which is Friday the 21st. And this rebalance is being done to address an over-concentration in the index by redistributing the weights of the 7 largest constituents in the NASDAQ 100. The 7 largest companies currently make up 55% of the NASDAQ 100, and during the special rebalance today, they're going to reduce that combined representation to 43.7%. So I think that could put some pressure on tech stocks. In addition, some breakouts started failing, and there was also breaking news in Apple that they're working on their own version of ChatGPT, and that news actually ended up failing really hard. You can see that here. It has this really nice up move and it just loses momentum. You can see the volume gets sucked right out of that. And in a bull market, when good news starts to fail, they start selling into strength. That could be a sign that the market is getting tired. It might be due for a natural pullback. I'm not looking for a crash. I'm just looking for a natural pullback back down to those short-term moving averages. So again, all these changes that I noticed that day led me to put on some 380 puts for this Friday and the Qs when the market broke back below VWAP. And I just bought the 380s again because I'm just looking for a short-term move, a short-term pullback, a natural pullback I would call it, back to these short-term moving averages here for a retest. So we end up getting a little bit of a gap down, and that's just due to Netflix and Tesla moving lower off their earnings. And in the morning, the Qs are holding below VWAP, but I noticed something really interesting when I look at the tick. When I look at the NASDAQ tick, sure, the Qs are above VWAP, they're holding green on the day, but the tick cannot get above 0. And like I mentioned in the last bar-by-bar video, a good indicator for a potential trend day is when the tick can hold above 0 or it can't hold below 0. And that has been a really good signal for a potential trend day. And I know that when the indices aren't reflecting what the internals are showing, that more often than not, the indices itself will catch up to those internals. And you can see that happened here, started to curl over, went red on the day, made a new low, and then we got this really, really clean trend. And as we got into my target of 380, I got rid of those puts for, a nice little chop there. All right, any questions with any of these trades?
Yeah, just I have a question on the Tesla trade you took. Sure. So I actually took that same short when it stuffed and then got flat right after it rebid, right?
Good job.
Thanks. The issue was I didn't actually re-enter the short when it got back under the level because just like how you said, like you want to see that volume break through. I didn't see that volume come in the breakdown until like the third candle, right? And at that point I thought I'd just be chasing if I was getting in there. So when it tries to break on high volume stuffs, are you okay reshorting it once it gets back below on lower volume? Because there's that kind of assumption that the wall that was there, if you will, is now decremented.
The way that I look at this is, sure, like this isn't good, but I mean, I took a scratch on this trade, right? Because I was super fast to just cover. But what I noticed was that it continued to hold lower, popped into this moving average, failed, and it's coming back down. And like, if this was a trap here, like we know how Tesla acts, or we should know how Tesla likes to act. Like this would have, this trap would have resulted in like a squeeze over VWAP, and it didn't do that.
Yeah.
Gotcha. Yeah, and in addition, the Qs started failing, which puts the wind at your back from the overall market, right? So I think it's worth another shot.
Yeah, that makes complete sense. Thanks.
More often than not, we have to try a trade idea multiple times. So as long as you're not taking large losses and you're just taking small scratches, keep giving the idea a chance as long as the pattern is still intact and there's nothing wrong with it.
I got it. Thank you.
Yeah.
Justin, where was your stop when you took the shorts a second time? Was it
Yeah,
above where we got sold like 277 area?
No, it's super tight because it should just work, especially if the market starts rolling over. So like I wouldn't want to see it rebid 276 again.
Justin, on the UAL trade,
Mhm.
so you talked about how when it goes back through the open price and after the failed attempt higher, you're looking to short the first pop. So I took a similar trade, but I took it just on I had a buy or a sell lower script just on the break of the open price. Why do you like to get short into the first pop as opposed to just taking it when it breaks under the open price, looking for the gap fill?
Yeah, so first off, I just want to say that you did an excellent job with that. I wasn't quick enough. I didn't have that order in, and typically, this is a pretty big move, right? From 56.90 down to 55, and oftentimes you'll get a quick pop, and I was just taking advantage of that. Yeah, you could take it here too. That's just as good of a trade, if not maybe even a little better.
Okay, cool. It's just two different trades and you got in on one, not the other. Makes sense.
Yep.
For your Carvana trade, I noticed like a lot of the other traders were actually swinging this overnight as well.
Mm-hmm.
And I don't know, you went over some of the reasons like the high short interest and how it held in like the top 80% of the range. And I see those, but how does that like affect you getting calls and your reason to sell those calls?
I wanted to have an equity position on just in case that this squeezed after hours, right? Because it closed at the top of the range, closed above $55, which is bullish. And in case this thing explodes after hours, I have equity that I could sell to lock in a gain against those calls, because you can't trade options after hours or pre-market, right? So just using that equity position in case it did something like this, that I could sell that, now have a nice profit locked in, and basically that call position, those lotto calls, those 59 calls I bought, I'm not going to buy that with a ton of size, right? It's risky. It's very speculative. The equity allowed me to have a cushion against those in case we did like get a gap down, or they announced that they began to sell stock or something like that. And yeah, like, look, it didn't work, but it didn't really matter, right? Because you got a pop in the morning. What I wanted to see, I wanted to see a gap up. We didn't get that. I'm selling those calls, and I still made money on the trade. Whereas like if I just bought those calls, I would have been flat or I would have lost money. But I think, for a unique situation like this, you want to have a big imagination, and you want to have multiple ways to express that potential idea that this could go 60, 70, 80.
Follow-up question about the calls.
Mm-hmm.
So you waited for the pop to get out. What's your exit strategy if it just dies off the open? How are you getting out of those?
So when the market opens, the options market lags behind a little bit. And it was just luck, right? It was just luck. When they opened up, we were getting this pop, and I sold right into that. Yeah, but I mean, if this thing took an opening drive lower, I would have got out for a loss. Not a major loss, but yeah.
So the pop just was almost coincidental with when the options market opened. You were looking to sell the open.
Yeah, no matter what, I was looking to sell those options when they opened up, because it didn't do what I wanted it to do, and I'm not going to be stubborn with calls that expire on Friday.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus, trading off of the laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.